Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get things underway today, let's recap what happened this week in the markets.
Yes, we can start this week with another week of higher cattle prices. Live cash cattle were nearly $3 higher this week. Even those feeder cattle markets were anywhere from $2 to $8 higher this week. Some instances of as much as $10 higher as well, we saw in some of those auctions. On the futures side, the October live cattle futures contract closed down $1.60, and the September feeder cattle futures contract closed down 45 cents. It's another week of gain in that choice box beef price, up a little more than $2 this week. We really had strength in all those components on the beef side of the equation. If we turn to hogs, cash barrel and gilt prices were down about 40 cents this week. The October lean hog futures contract closed up nearly $1.70 this week. And the pork cutout value was also higher this week, up nearly 50 cents. And that's as what were some much lower ham prices were offset by gains across the board and all the other components on the pork side.
They aren't big jumps on the box beef prices, but it is nice to finally see some steady movements in a positive direction.
Yeah, and I think you're beginning to see, those cash cattle prices respond a little bit to what's some better news in terms of the choice box beef price. So we'll take modest victories here in terms of some higher prices for a change.
I want to touch just a little bit on slaughter numbers. We're continuing to see, at least on the hog side of things, well above year ago levels, but maybe pulling back just a little bit. Is there some seasonal indication in there, or are we concerned about some slowdowns, at least on the cattle side of things?
Yeah, I think more on the cattle side, I guess, as I look at what's happening day to day, we've kind of seen a step back in terms of daily cattle slaughter. USDA is estimating for this week, the week ending August 8th, 633,000 head of cattle to be slaughtered. That's another drop this week from the previous week, down 5,000 head. It's down 14,000 head from a year ago. I just hope that's short-lived, as I know we still have a lot of cattle to work through the system. When you look at slaughter weights, we're still running 30, 35 pounds above where we were a year ago at this time. So that's not such good news. On the hog side, we seem to be, really chugging along amazingly well. 2.534 million head this week. That's down slightly from a week ago, but still 184,000 more hogs slaughtered relative to a year ago. So a little difference in terms of what we're seeing on hog slaughter versus cattle slaughter.
Let's talk a little bit about monthly red meat trade. Some interesting numbers coming out for June.
Yeah, if we start on the beef side for a minute and maybe get some of the not so great news, we've been down for a few months, and I think some hope for some rebound in the June numbers relative to what we saw in May. But in fact, monthly trade data down about 90 million pounds out of the United States for June, actually exceeded our decline relative to May. When you look year to date now, that puts us 113 million pounds below year ago, year to date. So although we started January, February, March with some higher numbers relative to a year ago, we've certainly taken a step back. I think, COVID in these countries, as well as what was some higher U.S. dollar for a period of time, and it's still higher than where it was, although it has come down some in value. Part of the reason for that situation on the beef side. So Japan, South Korea, Mexico, all lower in terms of taking U.S. beef exports for June. On the pork side, maybe a little better news, but again, I don't want to be too positive, I guess, there as well. Up 16 million pounds relative to a year ago. That does put us 817 million pounds year to date above year ago levels. And, that's really easy to explain in one single word: China. Thank goodness China's continued to be strong. Stronger Chinese exports in June certainly kept overall U.S. pork exports higher. So we're going to have to wait and see, but maybe as the dollar has weakened a little bit here of late, we can get some strength back in exports, and hopefully we get some of these other countries as they recover from COVID, have more interest in some U.S. beef and pork.
That was my next question. You mentioned due in large part to China. Are we concerned that all of our eggs are in one basket, and do we need to see more diversity and some more increases in a diverse set of countries for our exports?
Yeah, I think one can certainly point to that. I sometimes go diversity, in this case for me, is risk management, and I always look back to you could talk about soybeans going to U.S. soybeans going to China. If you depend on one market for a large amount of what you export, and that market decides to go away, it can be troubling to prices. And for U.S. pork, I keep reminding us, we know the Chinese are trying to rebuild sow herds and the pork industry. I'm curious what their trade appetite will be if they're able to get fully recovered in terms of pork production. And I think the answer is they'll want a lot less U.S. pork. So we better be looking for all of those other markets to help us as we move forward.
Scott, USDA also released land values. As we take a look at those, anything that is of interest as we take a look at that report, big picture?
So I guess so if flat or unchanged is big news, then we have big news in this report. And I say that because I think we continue to sometimes worry about the financial stress that's out in U.S. agriculture today, yet USDA is saying land values are fairly flat relative to a year ago. Now, I think we are seeing some changes state to state that matter. If you look at the report, Kansas and New York both down a little more than 3%. State like Idaho up 3.7%. So we're seeing a little bit of a mixed bag as we go around the state, around the country. But in general, we're again talking about another year where land values remain fairly flat. I think that's helpful for agriculture generally, as we sure don't need that asset base to erode on top of everything else that's going on right now.
I think the other big report for us, and probably one of the most important things for us to talk about, is economic recovery jobs report this week. We saw another, at least slight decline in unemployment.
Yeah, that's right. The unemployment rate went from 11.1 to 10.2% in the July numbers that were released today. That's good news. We're moving in the right direction. I remind us that 10.2 is still a higher unemployment rate than we ever saw during the 2008-2009 Great Recession period. If you look at jobs added, we added 1.8 million jobs in July, which isn't bad. It's a little bigger than I think most of the pre-reports would have suggested in terms of jobs added. However, I remind us we added 4.8 million jobs in June and 2.7 million jobs in May. So the rate of growth has been slowing. Now, maybe that shouldn't be a big surprise to us, but we have a long ways to go to get the economy recovered, and more jobs, more job growth would certainly be helpful.
More jobs, better economy, more demand for red meat, something that I feel like we hammer that point a lot, but it's something that really needs to be reminded of.
Yeah, and I think it's important because all of the COVID-related discussion we've had thus far, although we do talk about that demand side, we really haven't seen it yet. So now we have consumers who haven't seen the additional stimulus monies. Maybe we'll get those back as Congress debates the next round of stimulus, but it's not clear. And so I think the drag from the general economy will be what will become our focus as we talk about this latter part of 2020, especially when we know we're going to put a lot of beef and pork on the marketplace for the remainder of the year.
Scott, really, that's it for us this week as we look ahead to next week. A pretty fun-filled week for us.
That's right. So we're going to get USDA's monthly WASDE report out next week. We also get a look at retail prices midweek, which to me, it's going to be interesting to continue to see what's happening to consumer prices versus farm level prices. We've certainly seen those retail prices been moving higher. So that report will be interesting, and then finish the week with a consumer sentiment report.
All right, Scott, have a great week. We will talk to you next Friday.
Sounds great, Megan. You do the same.
Thank you. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe, and you can also submit questions as well. I'm lost. It's a Friday afternoon. And you, for those of you that are watching or who are watching on Facebook Live, you can submit questions there as well. There's also a ton of great Brownfield podcasts. You can find those online at brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.